But
This,
yeah, hello everyone. Welcome back. Cash to Capital. It's our first portfolio update. We're going over some of the stocks that we have in our portfolio. You got something to say or no?
oh, yeah. Hey, everybody. I thought you were gonna just pull up the portfolio. I, you, you know the stocks you have in your portfolio, right?
Yeah,
Okay.
we just gonna jump right into it.
Okay.
All right, here we go. Can you see my screen?
Look how fast his premium is. It's,
Yeah, we tried it before. It
it's
was very slow.
100 times better.
All right, you see the screen?
Yep.
Yeah. So pretty much, what we'll be doing is, I put in 500. My dad put in 500. And then, so my account is this custodial account. My dad can talk about the importance of that. And then his account is the individual account. And pretty much the goal is to see who generates more returns. And we'll be adding to these portfolios over time.
That's right. My son said something very important. Custodial account, aka a UGMA or UGMA account, Uniform Gift to Minors account, which Maddox has had since he was probably 10, 11 years old, and he's finally taking control of it. It's no longer a custodial brokerage. It's actually his brokerage because he's over 18 now. But the benefits of a UGMA account are, number one, you're getting your kids involved in investing. But number two, there's also some tax benefits to it. At the end of the year, if you're doing short term trading, there are less taxes that are taken out of a UGMA account because it's a custodial account and it's account for children. A lot of benefits to a UGMA, and I recommend you look into one for your kids.
Yeah, for sure. Very important. But yeah, so we'll be diving into some of the stocks I have in my portfolio right now.
You up, son?
Yes. Yeah, I'm up today. Yeah, so these are the four stocks I have right now. Definitely not just gonna stay with these four stocks. Probably add more stocks. Probably add some indices as well. But this is where we're starting off right now. I can start off with AMD, my first position. Yeah, so AMD, kind of a longer term play. I think AMD is a good company. I think some of like the AI hyperscalers are looking to diversify some of the chip companies that they're using. So I think this positions AMD to gain some more market share in the future. But their chip revenue is growing as well. Had a really strong earnings report last quarter. Looking at some of the financials, at 4 PE of 32, a little bit overvalued compared to some other stocks in the big tech industry. Not as bad as some other ones like Palantir. If you look year to date, up 34%. Part of that big tech rally this year, down a little bit from the all-time highs, but it's kind of like a longer term play. I believe in the technology they're making, and I think it'll be good long term.
Yeah, I mean, AMD has just been a high flyer. I remember uh, watching Lisa Sue on Jim Cramer's show when it was $8 a share, and he was super excited about it. And he said, that they were gonna give a lot of the chip makers competition, and they've done that. AMD is a real player in the AI space, and they are. Anytime you see when a new president comes in and he invites certain CEOs to talk with him about things that are going to be happening in the future of the United States, Lisa Su was one of those CEOs that was invited. When you see these people collaborating with world leaders, that means that money's getting ready to flow into their pockets. AMD is a long play. It's really a tricky stock because it doesn't move a lot with the other semiconductors. You have to be in it. I've traded in and out of it. Make a couple of dollars, lose a couple of dollars, but the way to play it, AMD is just to hold it and just keep adding to it.
Yeah, I think that's true, and this is kind of like a full circle moment in the last video. This is the first stock my dad bought back in 2016.
Bought it for you, son. Wish I would
Yeah,
have held it.
yeah,
So you spoke about something important, PE ratio. A lot of people use PE ratio to evaluate companies as a valuation tool, and I wanted to give I don't want terms to fly over people's heads. So PE ratio refers to the price to earnings ratio. And how you calculate that is you divide the current stock price by the earnings per share. Okay. And if you had a calculator right now, we can see the current stock price is $162. And the earnings per share is somewhere there.
1.73.
What is it?
1.73.
Yeah. So if you divided that, you should be around what the current PE is, what, about 93? Um,
Yeah.
but that's a tool that people use to evaluate companies. And the cool thing about PE is that it's not PE. You have to compare PE ratios in industry. You don't want to compare an AMD with like a General Motors or something that's outside of the industry, because that'll give you sort of a false valuation. You want it to be competing against other companies like AMD. You would compare the PE of AMD with like a Nvidia or a ASML or other chip stocks. So PE is really like a tool. Warren Buffett loves PE. His value plays are usually have very low PE. That's the other thing. The lower the PE, the better.
Yeah, that's true. Yeah, you want to look at the P in the industry, but you also want to look at the PE in the history of the company. So the PE was higher or lower 5 years ago. That might be an indicator if the company is overvalued or undervalued now. But yeah, definitely a good teaching moment. All right, so moving on to the next stock. All right, so here we have Google.
Google had a great day today. Look at that, up
Yeah,
six.
yeah, yeah, had a
What's
great
going
day.
on with that stuff?
Yeah, so yeah, up six, almost 7%. Yeah, so the judge ruled that Google doesn't have a monopoly and they don't have to sell Chrome.
Oh,
So this was
wow.
great news. Yeah,
Okay.
so great news for the company. That's why it's up so much today. But year to date, up 11%. I think it still has some room to run. Like if you look at, yeah, so looking at some of the financials, has a 4P of like 21 right now. A little bit lower than some other stocks in the big tech industry, mainly because that there's fears that AI and like ChatGPT are going to disrupt Google's search business. But to me, I don't think that's the case. Google search is still growing double digits year after year, and they also implemented AI mode in Google search, and they also have Gemini as well as other things. They also have investments in other places. They have Google Cloud, which is a very strong business. They have Waymo, YouTube. So I think long term, this is a great company, but I think year to date only up 11%, so I have some room to go. I think it's a good investment long term given the current valuation.
I agree, man. If you look at the market cap, I mean, it gained. It's at $2.58 trillion. Part of the Mag Seven. One of these buy and hold stocks. Google's got their hand in everything. With the data centers, as Maddox alluded to earlier, that it doesn't have to sell Chrome. They just got past their antitrust problems. Um, I think and I think Apple also went up on that news too. So, these stocks, Google, AMD, Nvidia, these are stocks that you really just have to buy and hold. You may not see them move for like half the year and then boom, they'll move. I think I think Google pays a little bit of a dividend, which is cool. And the 52-week low was 142, and it's at its 52-week high. But like Maddox said, the PE ratio is still 22 with a forward PE of 21. So, like you said, I still think it could get around that 15, 20% range of gain.
Yeah, for sure. Hopefully, has some more room to go. But, yeah, getting to the next stock. So next we have none other than Lululemon.
What do you
Yeah,
like
so
about that stock? I don't like retail, dude.
yeah,
That's your stock, bro. I think you got that because mom likes that.
yeah. Nah, mom's a fanatic. Yeah, if you look year to date, they're down almost 48%.
Wow.
Um, yeah, so not a good year for them. Yeah, due to some macro concerns surrounding consumer spending, consumer slowdown, as well as growing competition. They also had some inventory problems and sales slowed down in the United States. but they're growing internationally. And if you look at some of their financials, yeah, so like looking at some of their financials, have a very low P ratio of 13.78 forward P, which is definitely lower than some of the other companies in the industry. So I think definitely a lot of pessimism priced into the stock right now. But looking even deeper a little bit, you see gross margins right now at a 59%, and they've been growing year over year, uh, as well as operating margins. Free cash flow margins might be a little bit more volatile, but it's good to see they have strong margins while the stock price is going lower. So I do think this could be a risky bet, but I think it's the risk is reflecting the valuation. So I think this makes sense moving forward.
They just had two good quarters. They beat by 4.62% in earnings per share, and they beat in revenue as well. So, we're coming into a seasonal period when Lululemon's probably going to do well because of the holidays. So this might be a good sneaky play on your part, Maddox. I wouldn't have bought it because retail's been in the tank. People have been, because of inflation, things are more costly, so they haven't been paying, buying as much retail stuff. We see Target getting hit and a couple other retailers, but TJ Maxx is doing really well. Burlington stores, TJ Maxx, TJX, they all like in the same. I think TJ Maxx owns all of that, Marshalls and all that stuff. They're doing really well, mainly because what TJ Maxx does, which is brilliant, they let all the other companies buy the merchandise that get hit with the tariffs, and then when those vendors can't sell the product, TJ Maxx says, "I'll buy it from you for you can't sell it but I'll take it off your hands." So they don't even have to worry about the tariffs, and they're getting the merchandise at a good price. So if I was to buy a retailer, it'd be TJ Maxx. It wouldn't be Lululemon, but I see, Lululemon is I think it's bottom, like you said. The 52-week high was what's the 52-week high on it?
Yeah,
423, and we're at 200 going into the good seasonal period. So maybe not such a bad. Looks like it's bottomed. It hasn't gone below its 52-week low of 185. So I think it's probably bottomed. And sometimes when these stocks bottom, it doesn't really matter if they're doing well or not. Once they start the trajectory going back up, it's just going to keep going back up. So if you could ride the wave, it'd be good. It'd be cool.
yeah, that's true. They actually report earnings again later this week. I'm not sure how optimistic I am for that, but yeah, I think this is very risky stock. But yeah, like I said, I think it's the risk is given the valuation. I think yeah, this is probably like a great trade. I'm not sure
I, th- I
how
think
long it will.
I think because the market is a forward-looking tool, the
Yeah,
earnings report will probably be good, and I think you might get a good boost. But anybody trading around earnings is 100% gambling, okay? Because the stock could move 20% one way or 20% another way. So if you really have to be convicted or have conviction with a stock through earnings, because it can now there's so many people in the market, it can really be like the wild wild west. So if your conviction about Lululemon, you better hold it, and then if it goes down, buy more. These are stocks that you just want to keep buying through earnings periods. I think you got really strong stocks. This is a sneaky pick, but I think you're getting in at the right time.
yeah, very sneaky pick. I'm a fan of their clothes as well.
Yeah. Okay. You wearing a Lululemon right now?
Nah, this is a regular shirt. I got Lululemon other clothes, but
Come on, fam.
yeah.
Get your weight up.
So moving on to the next pick.
You don't know what to say.
So for my last pick, we got Roku. This might be like another sneaky pick, like my dad would say. Yeah, you can see year to date, almost 29%. Also kind of part of that tech rally this year. I think like looking into the financials, um, yeah, they have strong double-digit revenue growth, and then growth across their business segments have also been pretty strong across their device sales as well as their platform growth. They've done a great job diversifying into advertising as well. So I think this is like another like long-term play. I'm also a fan of the products they make, and yeah, it's something I'll be holding on to long term.
Yeah, big cord cutting play. Roku, I was thinking now that everybody has Roku, like how are they going to make money? I was reading that they're heavy into advertising now and they're becoming one of the big companies that advertise because what did they do? They have all this hardware they gave people and now they have a platform. So it's like if you have a platform, what's the best thing to do? Let people advertise on your big platform. And they're really doing well with that. They've actually beat the last 4 quarters. Last quarter they beat earnings per share by 145%. They beat only 3.6%, but like you said, in June 2025, they were double digit revenue growth year over year. A really interesting company. Probably not one company that I wouldn't want to get into because I think they've kind of peaked. But it looks like they actually once they've gotten all this hardware and stuff, they're finding other revenue streams, which is really slick. So you know, interesting play on your part. So,
Yeah, this is kind of like a sneaky pick. Yeah, I wasn't sure. Yeah, this is kind of like a long-term thing. I'm not sure how much farther they can go this year, but yeah. So pretty much like the whole deal is they sell you a device, and then once you're into their ecosystem, they'll upcharge you on something else. They make money when people subscribe to things. They're charging small business owners to advertise. So yeah, definitely a very sneaky way to to monetize their business. But yeah, that's pretty much it for my stocks.
cool. I think what probably because you still have some money in there. Probably should have bought Apple.
I mean, yeah, I still got some money. I got like 30,000 cash, but
No,
yeah,
you got more than that. Oh, you bought more AMD?
yeah, but more energy.
Oh, I didn't know that. Okay,
Yeah, so I'll be adding to these positions. I'll be, yeah, like I said before, adding more stocks, more indices to the portfolio as well.
right.
But anybody else seeing this, definitely appreciate any advice, any other companies you think I should consider. I'm just starting out, so willing to learn. But we can move on to what you got though.
Let's do it.
Are you see it?
Yeah. Um, I'll start with SoundHound. I won't go top to bottom. Um, I'll start with SoundHound. And if you look at my portfolio, there's a lot of red there, partly because of seasonality. We're coming into a time of year when stocks are usually low, or they could be low for I think they'll be low until the FOMC meeting with Fed Powell when he announces he cut rates, because a lot of these stocks that I have are very they're not generating revenue yet, but they are AI plays, and a lot of people have a lot of big time money has been flowing into these stocks. I follow, the big money, and that's where I see that money going. That's where I want to be early. Imagine like if you're in Roku or if you're in AMD, Maddox's stocks are like in Google before Google split, and you were in there early. So that's what I'm looking to do here. SoundHound, if you go to SoundHound, I mean, SoundHound has backers like Vanguard, BlackRock, you know, I mean, these companies are massive, and for them to say, "I see this company and I'm looking to put money into it," that's where I want to be. And Warren Buffett said, "When others people get greedy, that's when you get conservative, and when people are conservative, that's when you get greedy." So if you start to see like red and these stocks going down, and these big companies have them, just dollar cost average, into them, meaning that dollar cost averaging is when the stock goes down, you'll start to just buy more. What you can afford, that's important. What's your risk tolerance for that? So, SoundHound is a company. If you look at the 52 week, it's been all over the place, but they've shown in the last couple of quarters that they have some massive growth, revenue growth, and earnings per share. So I'm going to stick with them.
Yeah, definitely another sneaky pick. You can talk about SE on here too or no?
Probably. You like that one. So Floco Holdings, a lot of people, they look at AI and they look at like the tech plays, but artificial intelligence and data centers, what do they need to operate? They need energy, and energy is a big play. There's been a lot of stocks that have had double digit, massive gains in energy. You know, GE and a couple other Eaton, a couple other big players in the energy space. Oklo, you've seen. I think OpenAI, Sam Altman is involved in Oklo, so they've just been rocketing to the moon. So energy is a big player. And Flowco is one of these companies it's a good company. They do natural gas, and I think they also do oil as well. And they are in like natural gas technology, you know, so technological advances in natural gas that could help get, you know, this energy to places quicker. So I really like them. I'm gonna stick with them. They operate really well too. If you go down, they're um, sort of down by their 52-week low. By 14 now they're around 15, I think. So I'm going to stick with them, probably dollar cost average into them slowly. But an energy play, I want to get Oklo too. Oklo is a energy stock. I want to look into that one as well, but just not right now. I'll wait till after September. I want it to cool down a little bit. It's been up like a rocket ship. My son wants me to talk about SE. I mean, SE is probably the worst stock I've ever got in my life. I'm down 100% in it. Not that much money in it, but that was like you said, you're just starting out. When I first started out, like the craze was around cannabis. Cannabis was not legalized yet, so people were like, it was a cannabis like free for all. So people were getting in and making these companies. Essie's not even a real company, you know. So I lost like 100%. I didn't put that much in it. If you go back to the account position, I think I lost like, what's the total? $24 there.
Yeah.
24 bucks. So when I first started out, you know, you don't need a lot of money to invest, you know, and my risk tolerance for that stock was 25 bucks. I was like, that's all because it is speculative. I don't know what it's going to do. So I was like, I'll invest this $25. And I didn't keep dollar cost averaging because they weren't showing that they were actually selling a product. They weren't giving, you know, guidance or anything. So I was like, I kept reading up about them. There was a lot of hype around them and then it just stopped. So 25 bucks down the drain. So that's Essie in a nutshell. Genius Sports, go to that one real quick. Genius Sports is a sports gambling play. And I don't have to tell you how big sports gambling is, especially going into the fall with football and all fall sports coming into play, baseball going into the playoffs. Basketball would be starting in November, I mean, or late October, which is not too far away. So, you know, sports gambling is about to ramp up. And Genius Sports is one of these companies that's at the technological forefront of it, and they are really operating well. We got some big players in it. If I just Google who's invested in Genius Sports, give me one second. Here we go again. So Genius Sports include the NFL as the largest shareholder. So major shareholders in Genius Sports include the NFL. So the NFL is a major shareholder of this Genius Sports stock. Okay, so they have a vested interest of this stock making money, right? So the NFL, as long as large shareholder, along with institutions like BlackRock, Global Investors, Wellington Management, Mark Locke, CEO, Three Hills Cap. So there's some big players in this, and then also the NFL. So if the NFL is backing this stock, you know, I think I want to be a part of it. I can't tell you how much money the NFL generates every year, but NFL is a major shareholder. They're going to make sure that Genius does well. So I'm in that stock. How many got? Oh, and MBTS. MBTS is a really exciting play. MBTS, just like AMD, that's a semiconductor. Okay, and guess who the major shareholder in MBTS is? None other than NVIDIA. NVIDIA is backing NBTS. So, you know, if NVIDIA, the most powerful, probably one of the most powerful companies in the world, looks at vets companies and says, this company is a company I want to invest in. Again, who am I to say that stock ain't going to be good? So I want to be a part of that. I follow the jockey, as they say. And NVIDIA is a great jockey. They've been doing really well. So whatever they're putting their money into, I want to see what they're doing. And I want to make that makes the stock purchasing easy because they've already done the homework. They've done the work for you. So all you got, your NFL goes and gets Genius Sports, no brainer. I want that. Nvidia puts money into MVTS. They have a vested. They're gonna want that stock to go up. So I'm in MVTS long.
Yeah, and you also want to be careful. Don't just buy stocks till you see like an institution buying it or another person buying it. It's important to do your due diligence beforehand as well.
Yes, sir.
Yeah.
So Samsara is a software play, and they have had strong growth and recurring revenue. They're in a hyper growth stage, as I said. I want to read this real quick. It's super important. Consistently beating revenue and earnings estimates. In Q2 2025, revenue grew 37% year over year, and annual recurring revenue grew 36% year over year. Its growing customer base is maturing with a high and increasing percentage paying over $100,000. So, they are what we call executing and executing well. Super triple double digit growth, 37% year over year. Annual recurring revenue grew 36% year over year, ARR as it's called. So I think this stock and is down from its 52-week high of 61. So this is a stock that I think has a lot of room to run. And you want to look at stocks that are also executing too. So I think this stock is executing, and even though software, because AI has been set to like get rid of software, that people have not looked at this stock, but they're innovating and they're figuring out ways to connect with AI, and I just think it's a good stock, and I'm just going to hold on to it.
All right, so this is like the last one. What you got? What you got left?
Oh, which one? I think Max. Oh gosh, Maxion. I bought that at the beginning of the year. No, or maybe last year. I think I bought this. I've had this stock for a while. It's actually an options play, and we're gonna talk about options a little later. I'm trying to teach my son options. Options is a great way to make money. I like to invest in leap option calls, which are long-term option plays, and we'll break down options and these plays in further videos. But options is also a way to lose a lot of money too. So you for me, learning, you want to be in these plays long term, and that's how you make the most money. And we'll talk about option plays later. But Maxion, if you they are a Singapore solar power company, and I got them like last year when there was a lot of money that Joe Biden was putting into infrastructure. And I figured that Maxion would be part of, because I think that we do some collaboration with them. They own some American. I kind of forget how it is because I've lost most of the percentage. I didn't put a lot of money in it, but it's a Singapore company, and they're new too, and I still have some time on that option call, so I'm not going to add to it. I'm just going to keep it there. But I'm not heavy into solar because President Trump, he's not into solar as well, so he's not going to put a lot of money and put a lot of subsidies and stuff into solar right now. So it's just in there. It's like SE, it's in there, and it expires in next January. So I'll just leave it there for now.
All right, and something
If you
right.
go back to yours, Maddox. This is an important point. If you go back to your brokerage, your positions. If you look at Google, guys, you guys got to be in these stocks. Maddox didn't know it was going to pop today. He had no idea. He just was in the stock, and actually the stock had been underperforming, and it was below. But today it popped because he was in it. And a lot of times these stocks, you got to be in these plays. You can't be like, oh, I'm gonna wait for this and that. Like these companies that are $1 trillion valuations, like these are behemoths, and these stocks like Apple, Nvidia, Netflix, like these stocks, they will go down, but those are the stocks you need to be adding to. And Maddox got in at a good time. He got a little bit of profit there, right? But he didn't sell, So what I would suggest is that just purchasing some more, even if wait for a little bit of a pullback because a lot of people are probably going to be taking profit because there's been a big jump today. But as it goes back down, just keep adding to it, and just hold on to that. So time in the market is better than timing the market. So.
Yeah, that's definitely true. September historically is not a great month for stocks, so I'll probably be adding to a few of these positions. Yeah, like my dad said, when you're invested in stocks long term, you're not worried about short term losses or even like short term gains because you're in it for the long term.
Yo, when we go do crypto, man?
Yeah, I guess that's next. Um, yeah, but you gotta put the money up.
Yeah, that's what the people want.
All right, yeah. So crypto's gonna be next. Yeah, but that's pretty much it for this portfolio update. Definitely let us know what are stocks we should consider or who you think is gonna win the challenge.
That's right. Absolutely. Also, we're going to be coming up with a list of 5 stocks that you should have for your children. So look out for that list. We're going to be creating a Discord so you can come in and see our daily stock picks. So let's start investing, y'all. Let's make it happen.
Yeah, for sure. Yeah, that's it for this video, and see everybody next time.
6, 7. Yo,